Excellencies, ladies and gentlemen, good morning, good afternoon, and good evening, depending on your time zones. The evolution of South-South cooperation has been impressive. Before the global pandemic, more than half of the world's economic growth was contributed by the South, with intra-South trade accounting for more than a quarter of all world trade. However, the COVID-19 pandemic has reduced and in some respects reversed these impressive trends. In the first quarter of this year, we witnessed a significant decline in South-South trade, with a 14% drop compared to the same period in 2019. With widespread lockdowns, disrupted transportation and supply chains, depressed demand, and continued low commodity prices, trade between countries in the South posted its lowest numbers in over a decade. The fact that trade between developing countries has fallen faster on average than that of trade with and between developed countries provides a point of concern that export-dependent countries in the South may find it more challenging to bounce back from this global disruption. There was, however, some silver lining during this period, as trade in electronics, IT, and pharmaceuticals increased during the pandemic. Many countries, including those in the South, responded to demand from consumers who were remote working, as well as the demand from the health services to have essential products to combat the health pandemic. For example, trade in personal protective equipment, or PPE, recorded growth figures of 92% in the second quarter of 2020, rising approximately 122% in growth. The recent upward revision for trade growth announced by the WTO this month reveals some positive news, with world merchandise trade set to decline by only 9.2% in 2020, as against the 12.9% drop projected earlier this year. But this is very much based on the stronger trade performance in June and July, bolstered by an ease in lockdowns and an acceleration in economic activity. With the world possibly facing a second wave and new lockdowns, we must continue to be cautious. Behind these figures lay a stark reality. Poverty will rise for the first time in over a decade, with up to 100 million people being pushed back into extreme poverty. Foreign direct investment and portfolio investment to developing countries is expected to decrease by around $700 billion during 2020, compounded by a 30% fall in global investment flows. And we're seeing the devastating impact on livelihoods, productivity, and gender equality. Even before COVID-19 struck, financing levels and trends were insufficient to meet our collective commitment to the SDGs. Now, all sources of financing for developing countries, including private investment, face severe setbacks. The existing fault lines have become more pronounced. Just take a look at the exports of least developed countries. What was challenging before the crisis, doubling the share of LDC exports as set out in the SDG targets, is now practically impossible. And zero in on small island developing states, who are facing an existential choice between financing climate change mitigation and creating more debt by borrowing on non-concessionary terms to stay afloat in the face of a decimated tourism industry. This is why today's webinar and the emphasis we wish to place on deepening South-South cooperation is so important. It is a critical element of building back better and bolder. ITC's South-South Trade and Investment Program has, in partnership with the Institute of Development Studies, United Kingdom, developed a methodology on designing and implementing South-South trade and investment programs. And here at ITC, through our South-South trade and investment interventions, we have showed that it works. This report that we're launching today is timely as it helps to address some critical questions. Why promote South-South trade and investment? How can we better design and implement responsible and inclusive programs that support the growth and resilience of micro, small, and medium-sized enterprises, MSMEs, in the global South? Drawing from ITC's decades of experience in promoting South-South trade and investment through flagship programs such as supporting Indian trade and investment for Africa, the CETA program, and Partnership for Investment and Growth in Africa, PIGA, this methodology provides guidance to development actors on how to successfully design and implement South-South trade and investment across the developing world. This publication, Designing for Impact, speaks to the need to ensure that as we craft South-South trade and investment methodologies in the future, we must ensure it works for all actors involved. This demands a closer examination of fair and transparent global supply chains, transfer of technology, and of creating greater value addition in the countries of the South. In closing, I'm also pleased to note the partnerships this meeting brings to the fore: the United Nations Office for South-South Cooperation and the Institute of Development Studies, to name but two. This is a reflection of how we can do better by doing it together. I'd also like to recognize the Foreign Commonwealth and Development Office of the United Kingdom, the lead funder of ITC's South-South Trade and Investment Program, for their continued support. I am now very pleased to release the first copy of Designing for Impact: South-South Trade and Investment. I wish you a fruitful and productive discussion. Thank you very much.